When it comes to investing, return on investment matters. For that reason, be it a common man like you and me, or an institution, maybe like FII or DIA, we work so hard to figure out an extra income we can make out of the portfolio. That is how we can beat the index returns. The point is, creating an alpha returns is not that easy task. But there are certain techniques which are universally practiced, which are really good for a long term investors. That is what precisely we are going to see in this particular video. Remember, as a common man, when we invest in stock market, we may be thinking that the challenge in front of us is finding the good company, am I right? Because when, as a common man, am I right, we have a problem of getting informations. Most of those informations may be rumors, and it's very difficult to recognize the reliable informations on which we can place a bet. But we may consider that the institutions got an upper hand over investing in stock markets because they are quite accessible to informations. Am I right? Although it seems to be appealing, but institutions got their own a different problem. So institutions do work so hard to figure out the way to make a market returns, or even they work so hard to beat the market returns. And we are going to learn some interesting aspect what this FII, DII do in order to maximize their portfolio returns is what we are going to learn in this particular video. That let's say you built a portfolio and how or what you can do to make some extra income on top of it. That's the precise objective of doing this particular exercise. So if you are already having a portfolio, then this particular video helps a lot. But to understand the whole content, it is expected to have some reasonable understanding on derivative markets as well. And believe me, if you are a small time investor investing only thousands or 5,000s or 10,000s or even up to 50,000 rupees every month in stock market, this particular video is too early for you to adapt those concepts. You can continue watching this video, learn this particular concept. Once you build a portfolio which is more than a 10 to 20 lakhs, then you may start considering these exercises slowly in order to build that particular the wealth extra income out of it. Getting into NSE website, and I'm going to show you two hacks. And the first hack is, if you already have a stock in your portfolio, what you can do to get that extra income. And remember, this is not a very often you get it. This is pretty much rare in terms of finding this particular opportunity. But whenever it appears, people are smart enough in making use of it. So as a matter of information or a knowledge, it is certainly good to know. But whenever there is an opportunity, make use of it. Having said this, and if you look at the companies, what we recommend from a long-term investing are generally a very solid, a fantastic solid base, a market leaders. In a company like TCS, ITC, Asian Paints, Pidilite, but Asian Paints, Pidilites are pretty expensive, so we need to understand all those aspects as well. But the point is now these companies are not having a very attractive opportunity at this moment for me to give you an example. So we thought, why not we can talk about another company, and I'm going to use one top company. I believe all of these company you must be having it. The first company is, I'm getting into the screener website and I'm choosing this company called India Mart. Okay, you notice that India Mart is currently having close to 25% of foreign institutional investors holding. Am I right? As of September 2022, and you see that the public is currently holding close to 20%. Am I right? So 25%, who is holding it? Institutions are holding it. Am I right? Remember, this company has what to do with this particular company if you already have shares. Go to NSE website, go to India Mart. Look at this. If you scroll down, remember this company is there in derivative markets. Only then this hack can be applied. Okay. And if you look at the share price is 4,331. I want everyone to remember this for a while. The share price when I'm displaying it is 4,331. Okay. And I'm recording this video on 9th January 2023 post market. And if you go to a derivative section, and we must be having a future contracts, am I right? So I'm getting into all future contracts. and I see that the current open contracts are Jan, Feb, March, and look at the um, price, which is 4,264, that belongs to the future contracts. Remember, on the expiry day, you can see that the future price and spot price gets converged because there is a natural logic for it. Because on the last day, at the last minute of the settlement, the future price and the spot price gonna share the same behavior, especially on the last day. The future market and spot market gonna share the same behavior. That is the reason why on the last day the price is going to coincide. The spot price is 4,331, and if you look at the derivative market price, which is the future price, that is trading at 4,264. So that is 4,331. So on the one hand, spot market is trading at 4,331, and here it is 4,264. Can you see there is a significant difference between spot and futures that can be encashed? How? Close to 1.5% to 2% differences are there. And now, sometime back, I told you that the spot market and future market has a tendency of converging towards the expiry date. By minding this, what you guys can do is you can sell the spot in case if you already have those shares in your portfolio, you can sell it off. But at the same time, you should be buying them in futures. In a way, do you know what happens when you buy shares in futures? By which you are getting a right to buy that particular shares at the rate of prevailing price, which is 4,264. So now you are smart, am I right? You are selling something at 4,334, 31, and you are buying the same at the same moment, 4,264. There is close to 70, 80 rupees. Am I right? Close to 70 rupees, close to 1.5% you can make just by knowing this particular opportunity. But there are costs involved. Of course, do mind your brokerages and do mind your, the other holding costs. But your capital, substantial amount of capital is getting relieved in a way that you still get the interest in your favor because your capital of spot market gets immediately settled, whereas this requires only the margin. And anyway, the point is, what happens, Murugan, if a price goes down? Okay, that's the first question. In that case, anyway, you made up your mind to hold the shares. You are going to hold that particular shares, but indirectly you are saved your 80 rupees. That added another 1.5% alpha in your without much of interest. So you should not miss out these opportunities as an investor. You should be very keen about it. So if you have 150 shares of India Mart, then whatever I said is totally applicable. And the second hack I can certainly give you, but just give me your feedback about the first hack and how you can actually participate. And if you want any further suggestions from Axis, we can certainly provide you that.